Hello, I'm Tricia from Sovereign Funding. Today I would like to take the time to talk to you a little bit about the time value of money. What is time value of money? As we all know, time is money and money is time. Let's take just a minute and talk about the present day value of money versus the future value of money. Example, you and your spouse have just won a $10,000 cash prize. You have two options to receive your payments. Option A, receive the 10 grand today, or option B, receive the 10 grand in 3 years. Well, if you're like most people, you would choose to receive the cash prize now. Why would any rational person choose to defer their payment into the future, especially not knowing what our future holds? For most of us, taking the money today is just plain simple. I'm going to give you a few examples of how you can turn simple cash received today into more money tomorrow. Let's take your cash prize of $10,000. If you place your $10,000 in a simple interest-bearing account with a 4.5% interest rate, at the end of your first year, you have now turned your 10 grand into $10,450. Nice way to earn some extra money. Let's take the second year. If you put your money in that same account at that same rate, you have now got a value of $10,920.25. Again, a nice way to earn some extra money on your investment. While the other money is still just sitting there and gaining nothing, since we're supposed to wait 3 years to receive it, let's go ahead and do that option of doing it for the third year. At the end of the third year, guess what? Your 10 grand has now turned into $11,411.66. So now that we know what happens if you take the settlement and invest it, what happens if you don't invest it and do option B, and you wait the 3 years to actually receive the 10 grand? Well, we would have to walk backwards just a little bit, because instead of earning interest, you now are losing your interest. You would actually have to deduct the 4.5% interest yearly off the amount that you're waiting to receive. Does that make sense? Makes no sense to me. The figure would actually equate out to as follow. At the end of the first year, if you do option B where you lose the interest, your 10 grand becomes $9,569.38. Continuing on, at the end of the second year, your 10 grand now becomes $9,157.30. See the trend? And last but not least, at the end of your third year, your value is now $8,762. Obviously, option A is the better choice. Choose option A. These calculations demonstrate that time is literally money, and the value of money you have today will not be the same as you have tomorrow. Call Sovereign Funding at 1-855-EAGLE-CASH to get your money today. Don't wait for option B. Time is money, and money is time.